Okay, let's move on now and talk about the entire capex theme. Companies seem to be preparing for a post-pandemic world. Global companies are spending on new plants and machineries in ways they haven't done before. Of course, there are supply side blockages, that as well are spurring companies to invest in more production capacities to cater to all of this. So essentially, the capex cycle is doing pretty well. So we're going to discuss this and more with Deepak Shetty, the CEO and Managing Director of JCB India. Excuse me, and Rishi Sanghvi, the Managing Director of Sanghvi Movers. Gentlemen, thanks so much for joining in today on ET Now. When we talk about capex, on one side, of course, we're talking about companies investing in new capacities, generating, more production power for themselves. But then at the same side, it's government capex, it's private capex. Let's focus on the government capex bit first. Infrastructure. This is something that I think world over governments have been spending on. So it's going to be an infrastructure-led stimulus to the economy. So Deepak, let's start off with you first. How are you seeing this infra boom in India, and what's your take on the capex cycle upturn?
First of all, good morning and thank you for having me. While we are seeing a little bit of subdued demand presently, but we believe that the government's whole focus on infrastructure is going to continue. And particularly if I speak about the construction equipment sector, we feel that the sector is poised for a robust growth. I would also like to mention that the focus that the government gave as a part of the announcements really reinforced the focus that the government has on the infrastructure sector. Particularly the announcements around the budget. And in particular, I would like to mention that the industry's long-time demand for a DFI was announced, and recently the Honorable Finance Minister has announced the further steps. So I think it augurs very well for the infrastructure sector.
So Rishi, infra, obviously, we know that there is some solid happenings on ground. Do you think private capex as well is picking up? Are you seeing signs of that? And what are the sectors, where you're seeing the most amount of action?
Good morning, everyone. Just echoing what Mr. Deepak has said right now, the country is going through a massive infrastructure spend and a capex upswing. In the coal thermal power space, there's almost 10 gigawatts of energy coming up in UMPP projects. The cement sector is witnessing aggressive capacity addition by all private players, and nearly 18 million tons per annum is getting added. In the steel sector, there are expansion projects in Kalinganagar, Bellary and Angul, where another 13.5 metric tons per annum is getting added. Now, every single refinery and petrochemical site is either going through an expansion, upgradation, or through a new greenfield refinery. And nearly 20 million tons per annum is getting added. If you talk about urban infrastructure, major metro projects are getting developed across all Tier 1 and Tier 2 cities like Mumbai, Ahmedabad, Agra, Pune, Chennai, Bhopal, Bangalore. And on top of all of this, the wind sector is forecasted to do about 2 gigawatts of capacity addition this year, which is coming from the private space, auctioned off by SECI. So overall, there is a massive capex cycle, and we see it happening across all major infrastructure sectors.
Sure. Deepak, clearly you're both sounding extremely buoyant and optimist as well. Just wanted to understand whether this is really translating into order inflow already or not, and what's the visibility that you have on your own order book for the financial year ahead?
A very good question. I think we should look at this whole year in two parts. If you look at the first 6 months of the year, we saw almost a 60% growth over previous year. But as we all know, as we went through the months of pandemic, the demand subsided a bit. But I want to mention here that the second wave was much different than the first wave, in a sense that during the first wave, when the lockdowns happened, the whole economic activity and particularly the construction activity came to a standstill. And we also saw the migration of workers, etc. The second wave was different because we saw that the construction activity continued, subdued, but still continued. As JCB, we have got a big advantage. We have got almost 180,000 machines which connect with us through the IoT telematics-based platform, the JCB LiveLink. And it was very interesting to see that the construction activity continued across the country. However, having said that, the extended monsoon and also the impact of the second wave in the rural areas have posed some challenges in the short term, but we still expect that this particular year will be at least 10% better than the previous year.
Sure. Rishi, what's the visibility that you have on your order book?
Our order book position as of 31st July is 172 crores. So we are on track to beat our last financial year numbers by a very healthy margin, somewhere in the same range what Deepak is talking, between 10 to 15% year-on-year growth on our top line. In terms of capacity utilization for my company and in the industry as a whole in construction equipment rentals, we are at a utilization level of 75%. Now, this is almost 25% growth year-on-year from last year's pandemic year. So we see a very healthy order book and we see demand coming from all sectors.
Rishi, I'm coming back to you on this one because as I understand it in conversations that you've had with the channel before, you've spoken about deleveraging and assuming that you see that the business is going to improve and demand is going to remain buoyant for the rest of this financial year and going into the next few years as well. What is the outlook in terms of deleveraging? What is the outlook in terms of the debt on your books?
So during the last 3 years, Sanghvi Movers has repaid the bank term loans in excess of 375 crores. So that's within a 3-year period, we have reduced our debt to equity and it is only 0.25 currently. The total term loan outstanding on my books is about 150 crores. And we are very comfortable to repay this 50 crores debt obligation across the next 3 years. We will be a virtually debt-free company within the next 12 to 18 months.
Okay, that's great to hear. I want to come to you on the next question, Deepak, and talk to us about international orders and business. How do you see that panning out? Are there supply constraints that you're dealing with?
I think it's a very good question, and I would like to mention that it's a special year because we have seen that all the global markets where construction equipment has got focus, as was earlier mentioned, and I'm very proud to mention that we as JCB, we export to more than 110 countries around the world. I would hazard to say that JCB is a sort of an embodiment of Atmanirbharta or Make in India for the world. And this year has been really special. Almost 18% of our production is being exported. And that export is not only to the developing world, but we are very proud that we are exporting to USA, UK, Europe, and all the developed world also. So we are very positive on that front. Coming to the second part of your question, certainly there have been challenges, particularly as we all depend on a global supply chain. The disruptions that we have seen as a part of COVID, but more importantly, the disruptions that we have seen from the availability of containers and the logistics from China has thrown a big challenge. And also the continuous rise in the commodity price have also thrown challenges. So while there are challenges because of these effects, we see a great scope for further expansion in the global market. And I would also like to mention that the construction equipment industry now is the 3rd largest in the world. And that is something which is very positive.
Okay. I want to get back to that point on supply constraints. Deepak, let me go across to you for that. I know you answered it, but looking at how positive you are as well on the infra boom, on demand in the country, even abroad as well, we were just talking about that. Do you think that the supply constraints could sort of limit your ability to be able to cater to all of this demand?
I would answer this in two parts. The first part is obviously the continuous increase in the steel price, the diesel price, etc., have put a lot of pressure both on us as OEMs. But my really heart goes out for our MSME suppliers because they bear the brunt. And that is something that we have been also talking to the government. We have been raising this issue at different forums. And this can be a spoiler because the customer would not be able to bear the cost. And this can really create problems. So far as the supply chain is concerned, we have got very robust supply chains. And we are very proud that for our machines, almost 60-65% of supplies are through the suppliers in India. So we have tried to continuously focus on creating a robust ecosystem of suppliers in the country, which is helping us. But having said that, we are also dependent on supplies from China and other parts of the world. And non-availability of containers is actually creating a big impact. And also some of the logistics bottlenecks that we have for both for imports and also for exports.
Okay, all right. Okay, Rishi, well, let's understand then from you. You've given us some good growth guidance. You've spoken about, what you can expect from here on as well. I wanted to know that we're seeing a lot happen in terms of green energy. Do you see yourself and new energy? Do you see yourself moving in any way in that direction, or even for that matter, catering to sectors in that direction? Because I think that's where also a big chunk of capex is lined up over the next couple of years.
Absolutely. With the significant milestone of 100 gigawatts of installed energy that India has achieved, we are well on the path to becoming a global leader in the renewable energy space. And we have a very ambitious target that the Honorable Prime Minister has set for the country as 450 gigawatts. Now, if you look at the short term, SECI has already awarded 10,000 megawatts of new capacity addition. And this will come into play over the next 12 to 24 months where the project executions have to happen going forward. For us, renewable wind energy contributes nearly 40% of our top line. And we are the only company in the country that can go up to hub heights for windmills to 160 meters. So we have already geared up for these for the wind sector. And we have a dominant market share of 65% in the wind sector. So going forward, we're very bullish on this. And we see nearly 2 gigawatts of capacity addition in the wind sector being added year on year if we are to plateau out.
Okay, well, apologies for that, Rishi, as well as Deepak. Really appreciate you giving us your time today on ET Now. Thank you so much for speaking with us and giving us a sense of the on-ground capex and infra activity.